Welcome to your Mortgage Insider Update. It is May the 12th. We are coming off of some pretty big news. China has agreed to relax the trade war and bring everything back to a 10% tariff. So that way the U.S. De-escalating a lot of the concern. You would think this would be anti-inflationary and could really help interest rates. And in the long run, I think it will. The initial reaction is the stock market has really started to take off today. That has been at the detriment of bonds, mortgage-backed securities, and U.S. Treasuries, both rising on the interest rate relative. So in the wake of really positive news, not great news in the interest rate world, we are going to be watching for inflation figures coming out this week with both consumer price index and producer price index later in the week. So let's take a look and see how it's laying out this morning. We do start today off with the 10-year Treasury up 6 basis points at 4.44. Definitely a not welcome news to start this week off. Like again, with pretty positive news, anti-inflationary. Now, that is going to be a 90-day pause on tariffs with China. This coming off of end of last week, the UK, Britain agreeing to a trade agreement with the United States. So all these are super positives in the trade war front. If we've been concerned that the trade war was going to drive up inflation, seems like the opposite is taking place here. We do see mortgage-backed securities down. We can see today that the 10-year breaking above the 100-day moving average last week held pretty steady at both Thursday and Friday. After a move up on Thursday, we are seeing a break above. This is not a good sign. We really had hoped to break back down below the 25-day and 50-day averages, but both bouncing off that with positive trade news. This oftentimes happens where stocks will start to rise. Money going into stocks will come out of bond markets, and that can drive up interest rates. So we'll see how this plays out as the week unfolds with CPI, the Consumer Price Index for April, which will reflect a little bit of the tariffs to see if that has made any major impact in only a 30-day period of being implemented. So we'll let this play out this week and come back next week with another update and see where the 10-year, where interest rates will lie in the near future. The Federal Reserve did hold their interest rate steady, which was widely expected, coming off of both Bank of England has now actually lowered their interest rate. So as the European nations are offsetting their higher cost, now their trade war with the United States, the tariffs, there will be tariffs even after this UK agreement. The tariffs will just not be as substantial on some specific items, and the U.S. is going to start to trade more and sell more to the United Kingdom. But amongst European nations outside of the United Kingdom, we got the EU nations. Both the EU lowered their interest rate along with the Bank of England. A lot of the international monetary policies are starting to ease as the pressure from the United States, as our dollar becomes stronger, that's going to start to offset in their economies. So we'll see how this plays out on the U.S. side. We care most about the consumer interest rates here. So if the Federal Reserve finds it in their big playbook to lower short-term interest rates here in the United States later this summer, that could be a positive as we anticipate that things will be slowing down, even as the tariff war seems to be calming a little bit. There's still going to be tariffs. There's still going to be billions of dollars coming into the United States as far as the U.S. Treasury taking from these tariffs. Will that charge inflation to the U.S. consumer, and will that drive up our interest rates? We will see. Have a great week.